Hi everyone, welcome back to the podcast. As promised, I managed to pull Keshav out. We had some technical issues, I should say. So that's why I had Christian with me yesterday. Technical issues all sorted out, and we are back to talk about Learn to Earn, the next 20 pages. From page 112 to
32.
Yes, 112 to 32. Right, 32. That's a good progress, man. You did a good chunk of work. Not bad. Not bad at all. So what did you learn?
Sir, first I learned about the long-term investing, sir.
The advantages did one.
Yes, sir.
Runway.
He tells about that, sir. In the whole concept, he quotes that everyone knows that time is money, but time makes money. He quotes that, sir.
Yeah.
Time is the one which makes money. So, however you start your investing as soon as possible, it will reach up to some height, even with a single dollar and a $5 of investment.
Principle mathematics.
Okay, sir.
Or physics, I should say. It's called slope. Have you studied slopes? Do you remember studying slopes?
Slopes means?
The amount of work you have to do to take something up a slope.
Okay, sir.
Yeah. This is what I'm showing you. So you guys know what I'm talking about. Now, which one would you rather climb? If I asked you to climb up a slope, right? Which one would you rather go up?
So this one, sir.
Why?
Sir, because it is like more like this, sir. I have to put more effort. But here I can walk normally.
So it's as simple as this. This slope Keshav prefers because he says it'll be walking up the slope will be easier than this one.
Yes, sir.
Because he says if I have to climb up this, I have to put more effort. But climbing up this is far less effort.
Yes,
it's
sir.
the same principle of investing. So
Okay,
this is time. Right? This is money.
Okay, sir.
Right? He's showing to reach the same place. Right? You're reaching the same place in money graph. But the time you're starting is much later. Here it's starting much sooner. So you realize how slow the slope is. So the amount of money you need to put slowly over a longer period of time is far less. If you start very late, you have to put more money every month to reach the same goal. So I'll show you in terms of a SIP example.
Okay, sir.
So let's say you want to make 10 lakhs.
Okay, sir.
Interest is, return is 13. So let's say you only have 10 years to do it, right? You have to put monthly 4,000 rupees.
Yes, sir.
Right? But let's say you started when you were 18.
18.
Right?
Okay,
that
sir.
gave you another 30 years. How much you have to put? Where's 4,000 rupees and where is?
Just 230 rupees, sir. 226 rupees. I achieved 10 lakh. Okay. So that is what he is also saying, sir.
Yes. So imagine putting 200 rupees every month, right? Compared to putting almost 5,000 rupees every month. Now let's multiply that, make this into, this is a crore, right? This is 1 crore. Correct?
Correct, sir.
So let's make this 10 crores because you guys like big numbers, your generation.
Correct.
1 lakh and all like cheap. What 1 lakh? iPhone itself is more than 1 lakh, sir. What are you talking 1 lakh? So let's say 10 crores.
Okay, sir.
So 30 years. So you have to put only?
Put only 22,621 rupees.
Yeah. You put 22,000 rupees from today, okay, sir. 30 years from now, how old will you be?
9 crores, sir. 9 crore, 18 lakh 56,000.
Hey, yeah. This plus this. This is a wealth gained. You will reach 10 crores. This is a wealth gained.
Okay.
You're reading it wrong.
Okay, sorry, sir.
Yeah.
My investment amount is 81 lakh 43,605, but
The return is 10 crores.
okay, sir.
30 years from now, how old will you be?
Sir, I will be 54, sir.
54. Right? You'll have 10 crores and 54 if you just put 22,000 rupees.
Correct, sir.
Say you're like me, you're lazy. You don't do it. You wait till my age, which is 46. And you're reaching 10 years, right?
Correct, sir.
So 30 years. Now I start doing it. I want to do it. I will have to invest how much every month? From 22,000 is gone to 4 lakhs a month I have to put to reach 10 crores and 56.
Okay.
Your load is far less, man.
Correct, sir. So that is
But the funny thing is, I'll never catch up with you.
Correct, sir.
Because once you've lost the time, it's gone. I cannot make up time.
Correct, sir.
I can make up anything. So to catch up with you, I'll have to go put more and more money, where to a point, it will become impossible.
Correct, sir. So He tells us the benefit of being a long-term investor, sir.
Correct.
How it is good to invest long-term than
short term.
Then short-term, sir.
Yes. But people don't realize it.
Yes, sir. He also tells the thing called trying to time the market. He also states that if someone has that power, he will be the one who every media will be talking, not Warren Buffett or Bill Gates.
Yeah.
So he tells that, sir.
Yes.
He tells it correctly only, sir.
If I become Jesus and I'm turning water to wine, I won't open a wine store, man.
Correct, sir.
I become God.
True, sir. So that is what is.
If I have the capacity to predict the future, if I have the capacity to say which share is going to go up when, I'll become God of the universe.
Correct, sir.
Because I can say anything after that. People will listen to me. And if I jump, the whole world will jump.
Definitely, sir. True, sir. That is what he is saying here, sir. What are all the disadvantages of being a short-term investor? And he talks about timing the market and don't get panic in the market, because if you are a long-term investor, once you make your mind to be a long-term investor, you don't need to panic because you know the company which you have bought. When the price drops, don't get panicked. It will also go up. Most of the people lose their money because you state words, sir, every time. Herd mentality.
Yeah.
And when prices go down, every people will think that the stock is not doing good. So we sell whatever it is there. We get small amount of money. Then losing everything. That is the mistake most of the people make. But long-term investors don't think like that, because they hold on to that. They see that itself a buying opportunity. They will accumulate more. Then they will have a huge profit margin. He talks about that, sir. In that. Yes, sir.
Cool.
Okay.
Man, you're really getting in these concepts really great. You're nailing them down. Mutual funds.
Yes, sir. Mutual funds, he said that if you are not so good with stocks, means first he talks about the active managers, sir. Active fund managers. There he said if you're not good at doing things in your own way, then you have someone called managers, sir, who are good at
fund
it.
Managers.
Fund managers who are good at it, who went to business schools to learn about that and have
computer,
yes, sir. Yes, sir.
Candles,
so everything they will have. They know which are the companies to buy, and they will manage your stocks for that. But he also talks about the famous, the 20 pages. The thing I like this, he tells something like whenever a crash happens, even the active fund managers can't protect you from that, sir.
No.
There is not even a term called crashless portfolio.
Yeah.
He states that, sir.
Yeah. Anyone who claims that is stupid.
Yes,
but
sir.
You
True.
got to remember something he says in the beginning of the book.
Okay, sir.
That you don't have to become a rocket scientist to invest. Just basic math.
Correct,
basic. So if you know basic math, that means a fund manager and you are the same.
Correct, sir.
He might have gone to Harvard. He may have gone to Yale. He might have done PhD in investing. But at the end of the day, the amount of the requirement, the tool, you only need one screwdriver. You might have come out from Caltech, but you might have not gone to engineering school. But the screwdriver is a screwdriver for both of you.
Correct, sir. Correct, sir. He tells that, sir. You just need to know the fifth standard arithmetic to do the stock market calculation. That doesn't need so much work.
What value is a fund manager?
Sir, nothing, sir. Zero.
That's why Anand keeps saying passive.
Yes, sir. But the people who are, he mentioned as panic investors, only choosing the active fund managers, because they have mindset that they have no better than us. Right. They have everything. Right. And he also said that some news are convincible, sir. Like when a company has a news on it, the active fund managers can hear right away on that time. So they can make changes. But even active fund managers also has a herd mentality, sir.
Yes.
That they say that if a group of active fund managers...
something even better.
Okay, sir.
Active fund managers don't have control. You know why? Because the money is not his.
Correct, sir.
If everybody in the office give me 10 rupees, right? Everybody wants the 10 rupees back. Even if I say don't, wait, they're not going to wait. They're all panicking. So correct, I have no choice. I have to sell.
Correct,
so
sir.
My money. They want their money back.
Correct,
so
sir.
Even if I was Warren Buffett, who's a fund manager, if he says don't sell, wait. If they're scared,
we have to do that. Correct, sir. They have to do that. And he also talks about reinvestment, sir. What is reinvestment? That is, he also says that mutual fund is not a thing of a routine. It is more of a thing like discipline. You want first the discipline to make it as a routine. So follow that. Then he gives examples, sir. Like when you are investing mutual fund in a routine way, you have to give yourself a reward like sunglasses or something like that. Right. Or they also give some dividends. So you can reinvest on that. That is called reinvesting. He gives a nice example, sir. Yeah. That is much easier to understand, sir.
Correct.
That is why I am understanding, sir. Little by little, sir.
Great. I'm very proud of you, man. You're making great progress. So you got into this or you've not gotten this far?
Yeah, index fund and this one I bought, sir. And he also says that people who are not bought stocks in the time of 1940s or 1980, think so, sir. For more than 1,246 days, the stock market gave only 4.3% of return, sir. But in the 40 days of time, it gives 26.3. Yes, sir. Income. The one who went before the 40 days had a huge loss, but the one who yes, sir, the long term investors had a big profit out of it, sir.
Yeah.
So that is good thing to hear, sir. What are the advantages of being a long term investor? Now we came to know, sir.
I'm very, very happy, man.
Thank you, sir.
Did you get into picking your stocks, or you still yet to read this? I think you yet to read this, right?
Yes, sir.
Okay. So anyway, this has been interesting. Keshav is making great progress, guys. I hope you are also reading the book with Keshav, and we're helping him chug along, and he's doing pretty good. I mean, he's pretty much halfway through the book, and we might just make it before Christmas. We were going.
Yes, sir.
So I'm happy.
Thank you, sir.
I hope you guys enjoyed the podcast. I hope you're able to understand what Keshav was talking about. And if you have any questions, do reach out in the comments below.
Thank you, sir.
Great. We'll see you in the next one.
Thank you.